Payen. Let's talk some NVIDIA first. We got a note out from Goldman.
Yeah, that's right. I mean, I do wonder if some of the cap we're seeing in NVIDIA is related to some of the movement we already saw this week. But the latest research that we're getting on NVIDIA, Goldman out with an increase to its price target that it sees NVIDIA going to. Goldman's raising its price target to $150 a share. They previously had a price target of $135 a share. You can see it's, just around there now. It is maintaining a buy rating on the stock. It's on Goldman's America's conviction list. So it's a believer, obviously, in NVIDIA. They said they hosted an investor meeting with the CEO, Jensen Huang, the CFO, top brass, basically, at NVIDIA. They said they have a better appreciation of its, quote, competitive moat and the projected increase in inference workload complexity, as well as just what the trajectory looks like for future compute demand. They also talked about the increase to its fiscal year 26 and 27 revenue and non-GAAP EPS estimates. Those are increasing by between 7 and 8% respectively. So it sees, further momentum in the road ahead for NVIDIA. I do wonder if what we're seeing in terms of the, it seems to be hitting a ceiling today. Again, the gains that we saw this week off the back of that Morgan Stanley note and meeting that Morgan Stanley had with NVIDIA, where they talked about the Blackwell demand and what it looks like. And it looks like the subscription, essentially, for lack of a better way of putting it, for Blackwell is basically sold out for the next year, essentially. So the gains that we've already seen, it may be baked into the share price, at least for movement in the early action today.
Yeah, yesterday, day before, we've had a lot of pretty good NVIDIA headlines this week. The demand, the sales. So AMD also got hit yesterday. So the leadership seems to continue to concentrate around the stock. It's really amazing, honestly, that we continue to gain further leadership in NVIDIA next to its peers. The semiconductor group, the chart has been much slower, but if NVIDIA's moving, the rest have followed in the past. So again, like the SMH is basically like right at where it was in August. Technically, it did get above that level, but NVIDIA's really moving, and it seems like the language and the news we're getting justifies it, because the fact that the Goldman team is now saying that all the hyperscalers basically that we already heard all those CapEx numbers from, they're going to have to do more. Like, that's crazy.
They are. And Lisa Su has really been challenged with regard to AMD. And again, even the recent news from AMD wasn't enough to move the needle there. There have been all the talk. If we go back to a year ago, AMD would be second. And, you had the impression that it would be right on the heels of NVIDIA. But NVIDIA remains far and away the leader in this space. You had another street analyst out yesterday, Evercore ISI, maintaining their outperform rating on NVIDIA. Their price target, $150 a share on the stock. They said they had some positive takeaways from NVIDIA's AI summit that it had in DC this week. So the momentum remains on the side of NVIDIA as the front runner in this.
In a letter on Friday, Goldman Sachs increased its price estimate for NVIDIA from $135 to $150 per share, indicating an 11% possible increase. The investment bank stated that its analysts were more confident in NVIDIA's competitive position after a recent investor meeting with the company's CEO Jensen Huang, CFO Colette Kress, and IR representative Stuart Stecker. This was especially true given the growing complexity of inference workloads. Goldman Sachs said, "We left the NDR with a clearer understanding of the company's competitive moat, and crucially, the anticipated rise in the complexity of the inference workload and its implications for future compute demand." The bank went on to say that NVIDIA's competitive moat is supported by a number of factors, including the company's sizable installed base, its capacity for innovation at both the chip and data center levels, and its expanding and robust software portfolio, which includes domain-specific libraries like NVIDIA iAerial and NVIDIA Parabricks, which are used for software-defined and cloud-native 5G networks. Additionally, the company raised its projections for revenue and non-GAAP EPS for FY 2026-2027 by 7% and 8%, respectively, taking into account improvements in the co-LOIS outlook at TSMC, stronger order trends for AI servers, and larger cloud capital expenditures. Our revised FY 2026 non-GAAP EPS, excluding SBC, of $4.63 is 14% higher than the FactSet Street consensus, according to the analysts who have retained their buy rating and America's conviction list for NVIDIA. Goldman Sachs maintains its bullish perspective on NVIDIA's shares by believing the company is well positioned to capitalize on the continued demand in the cloud computing and artificial intelligence industries. After Huang, Kress, and other management members met with investors in a group setting, Goldman Sachs increased its expectations for NVIDIA's revenue and adjusted earnings for the fiscal years 2026 to 2027 by an average of 7% and 8%, respectively. According to the analyst, the decision is in line with recent changes in the sector, such as rising capital expenditures on cloud computing and robust order patterns from significant original equipment manufacturers of AI servers. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
Well, NVIDIA shares are moving still this morning. Looking at the NVIDIA chart over the last month here on our screen, it's up over 23%. And more than 20% over the last month. That welcome rebound after a weaker performance in August and early September. So what's next for NVIDIA heading into this next earnings cycle? Tony Wan is the portfolio manager of the T. Rowe Price Science and Technology Equity Strategy, which includes the Science and Tech Fund. I also want to note that fund has outperformed the S&P over the past 2 years here. You can take a look on your screen right now to see that outperformance of the T. Rowe Fund, which is that purple line, notably higher than the S&P. Tony, thanks for joining us. Let's start on NVIDIA. What is your bull case for NVIDIA heading into this next earnings cycle, particularly given the pressure we saw on NVIDIA after their last earnings print?
Yeah, so I think the market has been digesting the sustainability of the results. And, it's interesting because the numbers have been so enormous. And when you have to grow off of that higher base, the market's always concerned. And so I think what's interesting is that we're almost through this perhaps air pocket or digestion of in between cycles of the H100 and then into the Blackwell launch. And so I think the market has kind of gone through that. And what's exciting that we're going into the Blackwell launch, and I think demand is quite strong, likely. And so we could see that growth kind of sequentially improve perhaps into next year. And so I think that that's what we're looking forward to. And it looks like the NVL72 is back up and running. In addition, we're seeing a lot of good demand signals. Oracle having bullish outlooks. You had OpenAI raise a really big round, doubling their valuation. And Supermicro recently talking about 100,000 GPUs shipped, that are liquid cooled. So the cooling's been an issue, and looks like that's a bottleneck that we're working through.
What would be the next catalyst then? Is it all about earnings and what we're going to see here in several weeks?
Yeah, I think it's earnings here. I mean, the multiple is relatively reasonable, I think. And so here, I think the multiple probably holds. And then, you look at it's all about numbers for NVIDIA and growth off of this higher base. And so I think that's what we're looking for. And then also gross margins, could they have been reset on the last earnings? And then from here, as they launch into Blackwell, improve as they're selling more of the whole system. So I think that's what we're looking for on the stock.
Following investor meetings, Morgan Stanley confirmed an overweight rating and a $150 price objective on NVIDIA shares, pointing to promising future market conditions. For high computation inference applications, the analyst states that NVIDIA's NVL36/72 Blackwell systems continue to be the best option. Blackwell is being ramped up by NVIDIA according to plan, and the product is sold out for the upcoming year. We are still early in a long-term AI investment cycle, according to every signal from management, the analyst stated. When I last checked, NVIDIA's stock was trading over $135. This year, the stock has increased by 173%, more than double. According to analyst Dan Ives' letter to clients, the supply chain is experiencing unprecedented demand for AI processors driven by NVIDIA Corp and the AI industry's godfather, Jensen. This will ultimately cause a tidal wave of business expenditure as AI use cases proliferate throughout the organization. As this next-generation AI foundation is constructed, we predict the overall market opportunity for AI infrastructure might expand 10 times between now and 2027. Based on our calculations, $1 trillion in AI capital expenditures are anticipated over the next 3 years. NVIDIA's losses following the Q2 results were mostly anticipated given management-confirmed claims of Blackwell delays. Although Blackwell has been postponed for a few months, this does not alter NVIDIA's fundamental growth premise. As a result of the data center expansion and the AI wave, NVIDIA is expected to experience significant growth. During NVIDIA's GPU Technology Conference in March 2024, Jensen Huang, the CEO, projected that data center infrastructure spending will reach approximately $250 billion annually. Depending on how long this level of investment continues, this might come to a total of $1 trillion or $2 trillion over the following 10 years. Vivek Arya of Bank of America confirmed this estimate during the same Q&A session, estimating that the overall addressable market will be between $1 and $2 trillion, especially as more nations invest in their own AI infrastructure. Spending may reach the upper end of that range by the end of the decade. Naturally, NVIDIA won't control the whole $2 trillion market, as it will have to contend with rivals like AMD and in-house AI accelerators made by Google, Amazon, and even Apple. According to some forecasts, NVIDIA will lead the data center industry with a market share of over $950 billion between 2025 and 2029, less than half of the overall market. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Given this lid and mug the best performer? Why, it's NVIDIA, the incredible technology enterprise. It's arguably the most important company in the world right now. This may be, by the way, the most valuable hat in the world, because this is signed by Jensen. Right there, GE Force 25 years rings the NASDAQ opening bell tomorrow. 2 years ago, NVIDIA was at split-adjusted price of 11 smackers. And people were just beginning to realize that maybe it wasn't just a gaming company with some real fast graphics chips. This was just a month and a half before the launch of ChatGPT. The most exciting thing I can recall since you've got mail. By that point, I named my dog NVIDIA. That happened years before this bull market, but not everyone watches Bad Buddy or belongs to CNBC Investing Club, so you might have missed it. Eventually, NVIDIA and its Renaissance man CEO, Jensen, pioneered both accelerated computing and generative AI. We speak too much about the latter, not enough about the former. Accelerated computing is what makes things really work here. In other words, NVIDIA's created machines that think faster than you do, and soon will do almost anything better than you can do. Now, I don't want you freaking out. We're in charge here. We make the decisions, but AI saves a lot of time. I call it a lot of man hours, which is why it's such a revolutionary technology for the enterprise. And it's about to get even better, because we'll see an amazing jump in the on-the-fly thinking from generative AI when NVIDIA's new line of Blackwell chips gets fully deployed next year. They are so powerful, so fast. These guys basically invented a chip that is so quick that it created the entire AI business out of thin air. It wasn't possible before, but now it can do incredible things, and very soon it'll be both faster and better. By the way, I think it's going to do some stuff with video that's going to blow you away. I've never seen a company have such demand for its products, including demand from Tesla, which needs NVIDIA for self-driving cars, which we'll talk about. I'm sure you'll hear about tonight with the robot presentation for Tesla. The whole thing's remarkable, and the stock's 1,072% gain over the past 2 years was right there for the taking, as CNBC Investing Club members well know. I do think it's got more upside, which is why I always say own it, don't trade it. It does put a smile on my face. I am happy when people make a lot of money. It's just me. I will always be that.
Developing advanced chipsets known as graphics processing units, GPUs, is one of the most significant aspects of generative artificial intelligence, AI. These days, NVIDIA has complete control over the GPU market because of its A100 and H100 chipsets. NVIDIA's upcoming Blackwell series GPUs may end up being its largest product to date, despite the fact that these products helped the company achieve record sales and profit growth in recent years. Is this a good moment to purchase NVIDIA stock, given that Blackwell is scheduled to launch later this year? I'll give you one hint below that might assist you decide. CEOs are executives in charge of organizations. They are more than that. They are frequently experts in marketing. And Jensen Huang, the CEO of NVIDIA, is no exception. Huang claimed that Blackwell is in insane demand and that everyone wants to have the most and everybody wants to be first in a recent interview with CNBC. Taking everything into account, preliminary indications suggest that NVIDIA will have little trouble marketing its Blackwell GPUs. However, with so much promise ahead, I find myself becoming obsessed with one odd number. I am aware of the strict guidelines the Securities and Exchange Commission, SEC, has laid forth against insider purchasing and selling. It is very likely that NVIDIA's insiders currently know a great deal of information about Blackwell that is not yet available to the general public. Production levels, purchase orders, backlog patterns, and other information may be included. Because of this, it would appear a little shady if an insider made a large buy of the stock right before the debut of Blackwell. But let's take a step back and consider the larger picture in this instance. For the past few years, NVIDIA's bull thesis has been based primarily on the potential of artificial intelligence. Furthermore, creating a replacement for the H100 was a lengthy undertaking. Taking those considerations into account, insiders were able to purchase shares with the expectation that NVIDIA's efforts in research and development, R&D, would eventually pay off. When considering NVIDIA's share price from a different angle, insiders might be cashing out because they believe it won't be an enormous multi-bagger for another few or possibly many years. I'm having trouble finding a good reason to purchase NVIDIA stock right now, especially when you consider that well-known hedge funds led by Ken Griffin, David Shaw, and David Tepper have also been selling their holdings in the company. Blackwell, in my opinion, will act as a short-term accelerator for NVIDIA's expansion. Following the debut, I would closely monitor if insiders continuing selling or if, at last, someone purchases shares after all these years without doing so. If that occurs, it may indicate that insiders believe NVIDIA's stock is reasonably priced and has a lot of room to grow. Ultimately, I have a feeling that Blackwell will cause a few brief spikes in NVIDIA's stock price, which will be a profitable trading opportunity. However, as a long-term investor, I would advise against trading or riding the wave and instead looking for consistent, slow gains that can span several years.